Peter McGuire, CEO of XM Australia, welcome back to the table. It's in a ways it sounds somewhat nostalgic to be talking about how cold weather disrupts oil supply, and talking about some fundamentals rather than some big scary COVID illness that is spread across the world. So we're back to the basics: cold weather, higher oil prices.
Well, absolutely, Sean. Certainly in the Northern Hemisphere, though, Sydney, it's still not too bad looking out the window at about 24 and a half, 25
I
degrees.
know you have your shorts on under that table. I know you're just going to the beach.
I had to show that. Yes, exactly. I live opposite the beach, and it's a lovely time of year, mid February. But I will say this, certainly, as building on what Vandana said, we've just seen the most enormous rally over the last, really since the start of November for the crude market. If you're looking at what the vaccine's doing in 5 weeks, since the inauguration, it's been one-way traffic for, COVID numbers being declined and smashed down. Vaccinations, we understand where Israel is and certainly where the UK is. It's a hands-on approach, and they're very, very, I think, disciplined in their rollout. We haven't been in the same sort of fate here in Australia, so it's a different mindset completely. But yes, if we put our hearts over to what's happening in Texas at the moment, and certainly across that Midwest and up to New York, it's frightening as far as that Arctic blast. And let's hope that it's not there for much longer.
But Peter, I'd like to bring you back in on the question of I don't know if it's going to be your favorite subject, but I'm going to make it one of your favorite subjects this year: inflation. I put 2 headlines in the digest today. One on my favorite subject. Well, it used to be my favorite thing, ketchup. I'm not allowed to have it anymore, so not my favorite thing. But nonetheless, it was promoted by Heinz that they're going to have to increase the price of some of their food products because of the raw materials are growing. And then at the same token, we have another story from one of the Federal Reserve board members saying, don't worry about inflation. The fact that she actually had to say it would indicate that there must be some concerns that by saying it might make it happen. What's your own thoughts?
Well, I think first off, Sean, saying it may happen, but we're not worried about it at the moment as far as Jerome Powell's concerned, and I don't think many central bankers are. The other side, of course, is the input costs, and we're seeing crude at these sort of prices and a resurgence as far as commodity super cycle, so everything becomes far more expensive. But the ongoing saga is I don't know any central bank anywhere that's really showing positive rates after you strip that inflation out and you really realise we're at zero or negative. And that seems to be the mantra over the next 12 to 18, 24 months. So it's onward and upward. That stimulates stock markets because there's nowhere else to invest. And then the other side, of course, is, if inflation hits 2%, 2.5%, is anyone really going to worry? It's going to be a handbrake if crude's at $70 a barrel, more than inflation's at 3%. So that's where it all feeds into itself, that loop. And at the present time, I think traders are having a delightful time. It's been an incredible 9 or 10 months. And I think that this year could be an outstanding year for, one, markets volatility, and secondly, let's park inflation.
Why do you think, though, that she feels this case, the Federal Reserve President, San Francisco Fed President Mary Daly, felt the need to come out and make these points, that there are credible analysts, including Larry Summers, the former Treasury Secretary, who are putting up warning signs. The Fed may not be worried, but they're signaling that they're not going to react even if it goes above 2%. I suppose that's the point.
Well, that's exactly right. Look, central bankers someone's got to say it, and obviously it was San Francisco's chance to discuss it because it's front page news and we're all conscious of it. And there's, when you've got Professor Summers, his voice also a contributing factor. We understand that the world is mindful of it. But the other side, of course, is we've got to get through this COVID, the vaccination period, and how everything else rolls out for the next, at least the next 3 to 6 months, Sean. And it's probably just, putting it out there, letting everyone realise that, we're looking at it from a central bank perspective, but we're not going to really give it a lot of weight at the present.
Another big factor, Peter, of course, is where is China going and Asia demand in general. We had the IEA report out last week forecasting that indeed India would be the biggest growth in demand for oil over the coming decade and beyond, and not China. But that's on the horizon. Where's China looking coming back from its big holiday in the Lunar New Year?
Well, I think, Sean, it'll be a strong, from our researchers showing us that over the next 3 months, China is going to bounce back strongly. We've noticed that over the last really 4 to 5 months, it's been a very, very solid return, and that's only going to continue. So the next quarter to 6 months out is going to be a very, very solid time. I'm thinking Chinese equities will do reasonably well as long as nothing derails.
I mean, generally, the forecasts by the different provinces in China are at 6 to 8% GDP growth for 2021. That's back up to the big numbers again.
Exactly, that's right. So that's going to be a solid performance this year. I think Chinese equities will dance very, very strongly to the upside, unless you see something out of left field, and who knows what that's going to be. But at the present time, it's onward and upward. Strong earnings from a lot of the US manufacturing companies and technology. And so all of that, I think, just flows across. As far as India and that next decade, it is their decade. I think it's more than that. I think it's probably their century. 1.5 billion people, close enough, and coming from a low base. And when I've been to Mumbai with Vandana. We've been over there on talks, and you get an appreciation as far as an incredible country that's just so engaged, mobility. But more importantly, Sean, the youth of the nation really is quite startling when you see the age demographic, and everyone wants more. They want more mobility, better food, better everything.
We had the Narendra Dattania, the senior advisor of the BJP party, on yesterday. He's forecasting potentially a 9% growth in India in the next fiscal year, which is bionic. But Peter, your outlook for the rest of the week, where's this market going, if anywhere but continued upward motion?
Well, Sean, I'm looking at US dollar index. I always say that, but it's sitting at around about that 90.4. I'm also looking at the next part, of course, which is where does the US equities trade? We had Monday, which was a holiday, President's Day. So I'm conscious of that side of it. Do we see an uplift? It was very choppy today across Asia. And I just think that there could be another little bit of a push up. Traders are at home, the big, and I know it sounds crazy, but the world doesn't stop because we're having a freeze in. And I think the traders are probably looking and they're saying, well, look, I see a little bit further of opportunity. We're seeing good volumes. And I think that may continue across, the commodity set, and next, of course, equities.
Is there any argument to be made where the dollar could strengthen from here that would give it support?
Yeah, you could see it. I mean, there could be a 91 handle there, a 91.5. It's only early in the Biden administration. I think it's still, it hasn't got its firm footing. And it's been choppy over the last 6 to 8 weeks. So, yes, that could see a little bit of an uptick where at that bottom range, we're not in the 89 handles, but there's every chance you could see it back above due to the stimulus and due to, I think, a general consensus that, the rest of the world's not doing as well as what the US is doing.
Well, let's wrap it up there. I just want to take the opportunity to heads up on the Fujairah workshop next week, where we're going to be looking at the question of what needs to happen to elevate Fujairah into a global energy trading hub. It's on that journey, and next month is the big development where the Murban contract will be go live, and it, of course, will be physically settled in Fujairah, and ICE Futures Abu Dhabi will open its doors next month. Our halftime talk this week feature interview with the CEO of OMV, and he said its story is all about jet fuel. I suppose when it comes back, the oil market will go. So that's for the watching and the looking. When you have a chance, actively encourage that. But until we catch up again, thank you, Bora in London, Vandana in Singapore, and Peter in Australia and Sydney. Back to the beach. Enjoy your barbie. All the best. Catch you again. Thank you very much.
Thank you, Sean. Thank you.
Thank you. Bye-bye.
Bye.